very often Islamic finance is looked at on purely economic terms. And based on that logic, there's a tendency to say, well, it's irrational in some ways to engage in Islamic finance because it is often costlier to deal with Islamic banks than to deal with conventional banks. And certainly people go out of their way to deal with Islamic banks. Why not deal directly with conventional banks? And in my observation in terms of the motivations of people who are attracted by Islamic finance is that it is not the economic argument that is the primary motivation behind dealing with Islamic institution. There is a religious or an ethical factor that I think underlies the growth of Islamic finance. And the analogy that I use would be that of the religiously based dietary rules in terms of why would somebody insist on eating kosher food or halal food. And if a nutritionist were to look at, again, people eating religiously condoned food, the nutritionist would probably be puzzled, because the nutritionist would say, well, why pay more? Why go out of your way to eat this kind of food, considering that if you look at caloric intake or at even at the ingredients, etc., you'll find the same thing. So why go out of your way to eat that kind of food? And I think that very often when people look at Islamic finance from a purely utilitarian standpoint, they tend to miss the point, because I think survey after survey shows that there is a preoccupation not only with religion, but there's also preoccupation with ethics in general. And especially, I think, in the light of the recent financial crisis, which did not really affect the Islamic banks, or certainly it did not impact them in the same way it impacted conventional banks, in large part because Islamic banks did avoid certain types of practices that in their day tended to appear as being very lucrative. Although it is very recent, it was created, or it came into existence around 1975, but it is based on an ancient tradition which goes back to the early days of Islam in the 7th century. And what is specific about Islam is that, unlike other religions, it never looked down on money making or on commercial activities. And there's a verse in the Quran which says that making money from trade is fundamentally different from making money from money lending, in that making money from trade is allowed, but making money from lending at interest is not. The other thing that should be known about early Islam is that, first of all, the Prophet Muhammad, the founder of the religion, was himself a merchant, and his immediate successors, who presided over what is regarded as a golden age of Islam, were also merchants. And for hundreds of years, a number of trade routes, specifically the Silk Road, were governed by Islamic law. So there was always a central element of the Islamic faith, which was commerce. And the final point I want to make about the specificity of Islam when it comes to economics and finance is that in many parts of the world, especially in sub-Saharan Africa and in parts of the Far East, the adoption of Islam was not due to military conquest, but rather due to the work of a coalition of merchants and preachers. So the merchants played a central role in propagating Islam in various parts of the world. One aspect of Islam that is interesting in terms of finance is the prohibition of usury. Now, interestingly enough, that element was not unique to Islam, in that if you look at other, certainly monotheistic religions, you see very comparable prohibitions. Except that certainly in the Christian world, the way in which things evolved was to establish a distinction between interest, which was a moderate pricing of money that was regarded as necessary for the proper working of the economy and not predatory, and then usury, which was regarded as excessive rates of interest. Now, in the Islamic world, the evolution has not been quite the same. But at the same time, I think that certainly in the past few years, with preoccupations with predatory lending, the notion of usury has reappeared on the scene. And one thing that I often test with students is to ask them whether they're aware of the so-called usury ceilings that existed in the US until the late 1970s. There was kind of a formal repeal or an effective repeal in 1980 of those usury ceilings. And the whole notion of usury has pretty much disappeared from the scene, at least until the recent financial meltdown. And one reason why Islamic finance can be interesting is that it leads people to ask some very basic questions that were asked, at least until the wave of deregulation of the 1980s. The connection between morality and finance, etc. In hindsight, there was one mechanism in Islamic banks, which was to have actually the so-called Sharia advisors, whereby you had some religious figures who would essentially vet the new products that would be sold by the Islamic bank. And very often they were asking very basic questions before approving a product. One of those basic questions was, what for? And the real impact of having this layer of control was that it got people to think, first of all, about the usefulness of certain types of products. Second of all, looking at the implications of selling those products. Now, this vetting mechanism did not exist in conventional finance. And what happened in conventional finance was that we saw open-ended innovation where new products were created whose usefulness was dubious at best. And what really happened was that anything that made money was assumed to be useful, and that it brought some social benefits to the community. The reality of it was that very often those products were truly toxic, but they were also lucrative, at least in the short run. So I think the disappointment of many people, given what happened in finance, has does explain the renewed interest in Islamic finance. There are also other practices in conventional finance in terms of compensation of bankers, etc., that would normally not be allowed under Islamic finance? Well, historically, there have been two parallel developments in Islamic finance. One centered around the Gulf region, alongside with some other countries such as Egypt or Pakistan, where again Islamic finance started developing in the late 1970s. And then the other hub of Islamic finance is Malaysia, where starting in 1983, there was a decision made by the government of Malaysia to promote Islamic finance alongside with conventional finance. And the attitude towards Islamic finance in Malaysia was that Islamic finance had to be forward-looking and had to be a central element in the economic development of Malaysia, as well as in the promotion of the Malaysian population, or I should say the Malay population in Malaysia, considering that the Malays, who are Muslim, make up around 60% or so of the population, but most of the wealth in Malaysia has been in the hands of non-Muslim communities, such as the Chinese and to a lesser extent the Indians. So part of the policy of the Malaysian government was to focus on Islamic finance, again, in a forward-looking way. And that was facilitated by the fact that the religious establishment in Malaysia was ready to accept certain innovations that the religious establishment of the Gulf region was not ready to accept. Another way of putting it is that in the Gulf region, the attitude was, let's go back in history and look at whether certain practices were current or did exist throughout Islamic history. The attitude in Malaysia, in contrast, was, well, let's look at the spirit of Islam, especially in terms of the attitude towards wealth and towards economic activities. And let's not get bogged down in looking for precedents. So those two models have evolved in parallel without necessarily communicating much. I think in the foreseeable future, there's only one way to go for Islamic finance, and it's up. And one reason for that is that there are about 20% or so of the world population that belongs to the Muslim faith. And another way of looking at it is that there's a great deal of Islamic wealth, especially in the Gulf region, in countries like Saudi Arabia, etc. And yet, Islamic finance constitutes only about 1% of the global financial system. So what we've observed in the last few years, indeed in the past few decades, was rates of growth of 15 to 20% a year. And this is likely to continue, maybe not forever, but certainly for the foreseeable future. There's also a sense that there's a lot of demand from populations in various countries, whether they're predominantly Muslim or not, in that poll after poll have shown that Muslims, given a choice between two identical products, one Islamic, one non-Islamic, would go for the Islamic one. There's also another interesting phenomenon, which is that there is the rise of what might be looked at as interfaith finance, in that there are a number of products that appeal to different faith groups. This is especially true in connection with certain types of mutual funds, where different groups, whether religious or primarily preoccupied by ethics, have similar criteria in terms of selecting the stocks they invest in. And there have been a number of groups that have brought together all of those elements. And that's another area where Islamic finance can grow. One more example is in this phenomenon of Islamic mortgages, where typically the arrangement would be an association between the lender and the borrower, so that both can take advantage of the upside. And in the case of the downside, if the price of the home goes down, then both would suffer equally. So this idea has proven quite attractive in many parts of the world. And the general perception is that this idea makes sense, again, whether you're a Muslim or not. And the fact that this type of arrangement for mortgages has been mostly developed by Islamic finance would suggest another area that can be attractive to non-Muslims as well.